Howdy there, folks. Welcome in. It's a buy one, get one free here today on the reaction channel. Two videos to react to. First one up here. Stock market wants to rip higher despite tech earnings. We're going to react to that one. I got some points I want to make in regards to that whole, the market wants to rip higher from here, okay? Next video up here is from this man, John Mowry, who basically went on CNBC, I guess, back-to-back days. Now, I haven't actually seen this one yet, but I saw him yesterday. I gotta say, might be my new favorite guy I've ever seen on CNBC, this guy that's in this interview, essentially, okay? The points he brings up, I think, are absolutely phenomenal, and he's definitely someone that I'm like, oh, wow, we actually got somebody using their brain. I'm very, very impressed, so we'll react to that one. I'll give my opinion on kind of what he says. Like I said, this man was on CNBC also yesterday, and I thought some of the points he brought up, I was like, oh, I love that, okay? So, yeah, I appreciate everybody joining me, as always. Thanks for being here. Oh, my gosh, guys, I think we are over 23,000 subscribers now on the channel, so I appreciate every single person that subscribed to the channel. Thanks for being here, guys, as always. Also, everybody in the Patreon squad, if you didn't know, yesterday I posted my moves in there. If you haven't joined us in Patreon, definitely do so. That will be pinned comment down there. It's like $2, $2.50 a week to join there. It's a no-brainer. You get to see the stocks I'm buying and selling, but the main thing is you get to see how I'm building up this portfolio. I just started this portfolio in January, and you get to see exactly how I'm adding to positions, growth stocks, value stocks, dividend stocks. You get to see it all in detail. So I think it's definitely somewhere you want to join, and that would be pinned comment. And for the more advanced investors out there that are looking to join my private stock group, my private wealth group, and looking to apply to join us in there, that will be linked in the description. Let's go ahead and get into this.
Apple, Alphabet, and Amazon since Monday. There they go. Amazon's the biggest question mark, perhaps, after those earnings numbers. Stock only up 1% on the week. It does beg the question, does the rally have more room to run? Let's ask George C. of Annandale Capital back with us today. So how do you feel, George, after all of...
They brought up Amazon there. Let me tell you guys something very important about Amazon, okay? Expect Amazon to have their EPS and net income take off like a rocket ship over these next 2 years, okay? They had so many one-time costs and charges and so many things working against them over this past year, and all that goes away in 2023. And so expect Amazon to be in an absolutely phenomenal position in regards to their net income and their EPS for the next several years. And just wait to see the numbers, okay? Don't be surprised if Amazon comes in with some epic beats on the bottom line over this next couple years.
These reports are now on the table.
Well, Scott, as we all saw today, and happy Friday to you, they were very mixed, and some of them were better than expected, and Meta was euphoric, and then you got Amazon as kind of a disastrous one here today. So it's a real mixed bag. There's a lot of headwinds to tech stocks, whether it's multiples, whether it's the Fed still on the alert, whether it's the economy still softening despite the employment report today. But the market wants to rip higher right now. And the fact it didn't go down very much today after two incredibly strong days back to back was very impressive.
By the way, it's funny because obviously Meta, and that's one of my biggest positions overall in my portfolio, right? I got to talk down Meta for just a second here because people act like Meta had the best earnings of the bunch because it was a stock price that went up the most. Let me tell you this about Meta. No, they had the worst earnings of all the big tech. Why did that stock fly up and do amazing compared to all the other big tech stocks? One, it was pretty much the most beaten down of all those other stocks, right? The second reason is Zuckerberg basically says he's going to run a smaller Meta for the next several years. It's basically kind of what he telegraphed there, as going to be much more efficient, which means Meta is going to go back to the old Meta, which was one of the most profitable companies in the world. And so look for Meta to... I don't want to say they're going to become the most profitable company in the world over the next 3 to 5 years, but let's just put it this way. The net income and the EPS this company is going to throw off is going to be silly over this next few years. That's why that stock went up so much. It had nothing really to do with the earnings, and those numbers were not good out of Meta. But expect a huge improvement, and that's something we have going for the stock market, right? Companies like Apple like Amazon, for instance, and Meta, their margins are going to increase dramatically in 2023, and their net income is going to increase dramatically in 2023. It's a big shift and a big divergence between this past year, right? And so that's another reason it's hard to get the market down right now, because you have some of these companies that are actually going to see their profitability go up throughout 2023, regardless of the economy. We know it's not going to be an exciting revenue year for these companies, but several of these biggest companies in the world are actually going to see their margins improve and see their profitability improve in 2023, which is kind of almost shocking.
Meta especially, right? I thought maybe we expected to give back after that huge run, and it just really didn't happen. But you going in thought that this rally had gotten a little bit ahead of itself, right? I mean, that's fair to say, isn't it?
I still feel that way. I think the market's going to chop a lot this year, and I think everybody should just enjoy these tremendous gains we've had in the last few weeks and the first month of the year, as long as they last. But I think they're going to give back at some point. There's just too many headwinds.
I love this. The way this man's talking right here, this is the way so many Wall Streeters are talking right now. And like I tell you guys, I watch so much CNBC. Either I'll put it on the TV or have it on my phone on Fubo, right? And just, as I'm working, I'll just have it on. And let me tell you what all these Wall Streeters are talking about. Almost all of them, okay? Like 90% of these people that go on CNBC. This isn't sustainable. We're going to have a major pullback. No faith in this rally. This is 90% plus of these people that I've seen go on CNBC over this past 1 to 2 weeks. They all talk the same way, okay? 90% plus of them. And so that gives me a lot of comfort in this market. And that almost makes me say, gosh, maybe this rally keeps on rolling, because when I see all these folks still so bearish, so negative, so many headwinds, we're going to have to go back down, going to be a lot of chop in the market. I think we're still going to go down to S&P, blah, blah, blah. When I see them talking like that, I mean, it gives me more comfort. The less comfort I have is when all these folks will eventually be bullish again, right? And that's a moment I'm like, oh, crap, man. Every one of these people thinks the market's going up from here. We're still not in that market. I can tell you, if we roll along for the next month and these gains stick, believe me, these Wall Streeters will turn one by one by one by one, and they'll all start going to the bullish side. But right now, the rally hasn't been long enough for them to believe it yet. If this actually sticks for the next few weeks, that's the moment where they start going more and more over to the bullish side, and you see even a next level of buying momentum there.
Did you sell anything? Did you take any profits on the Meta pop, for example?
I was begging my team to sell some Meta and to write some call options against it, but we didn't do that. We wrote some calls on some other stocks, and I still got about a half of my growth stock position I don't put on, but I would have put it on at a lot lower prices.
I mean, that's the interesting thing, in which you told me before when we spoke about this move in tech to start the year, is whether you are going to get that chance to buy things lower. And if so, if you're going to get the chance to buy them as low as you'd like. Those are two different questions. Do you think you will?
I think you'll definitely get a chance to buy lower. To buy as low as I'd like, I'm pretty picky and pretty stingy. So they may not go down as far as I want, or as far as some of the uber bears in the market who are going down another 20 to 30% while. But I'm going to be disciplined in here, because I still remember watching Microsoft flatline between 2000 and 2017, a 17-year period, with a whole lot of volatility in the interim. And I don't think we're going to do that again, but I think we could have a multi-year workout period where we've got a lot of chop for 2, 3, 4 years. And I think you can afford to be disciplined and wait for your price points.
Which one are you looking at more than any other to perhaps add to? Because you really have a full slate, whether it's Alphabet or Meta, Amazon, Apple.
This is the way every single person always thinks about a bear market, and the way they all talk is, it's going to go back down. I'm going to get my pricing. Right? And then it never happens. It never happens, right? For a lot of folks in the market, what I found time and time again is in these bear markets, these vicious sell-offs, is the price never gets low enough for them, right? You had a chance to load up on Meta under $90, and people still got too picky around that, hoping it would go to 70, right? Look at Tesla recently, right? These folks were talking about it's going to $50, it's going to $60, right? $50 to $60. That's where they were predicting it was going to be right now. Look where Tesla is right now, okay? It's never enough for these folks. And if Tesla did go to 50 to 60, you know what they'd be talking about? It might be going to 30 to 40. That's when I'll buy. Oh, it might be going to 20 to 25. That's where I'll buy. It's like, dude, come on. At some point in time, you just got to be realistic about these things. You get stocks at multi-year discounts. and you're not taking advantage, you are the greediest of the greeds, okay? Bottom line, if you're not willing to take advantage of stocks that are at multi-year lows for the greatest companies in the world, you are the greediest greedy person in the market, and that's unfortunately most of these folks.
Qualcomm, Microsoft.
Yet they'll be the same ones piling into Meta when it's back at $350 a share.
I mean, you're really spread across the board here.
I'm pretty well positioned in Qualcomm and Apple. I think Apple's a lifetime hold. I really don't ever sell the stock. I do write some calls, but I'm really focused on Amazon and Google right now. I think that I love weakness in great companies, and they're both acting pretty weak, especially Amazon right now. So I need lower prices, but I want to add to both of those significantly over the next year or two.
I hear you.
Yeah. We'll see, buddy. All right, next video up here from a gentleman I actually do respect. I think he has some great points, and let's hope he brings up some good points on this video because, like I said, the one yesterday, he brought up some amazing points, so I'm hoping this one he does as well from the previous day. Let's listen to what he has to say here.
Biggest week of this early year now in the books. Did the Bulls get a leg up, the one they were looking for? Let's ask John Mowry. He's NFJ Group's Chief Investment Officer with me here at Post 9. You are one of the Bulls.
I am a Bull.
Did you get a leg up this week?
This is what we expected. There were a handful of things that were really culminating in the rally that we've seen. At the end of last year, you had the highest cash balances on mutual funds on record. You had the most people calling for a recession since 20, okay, and this since 2011. You had commercial hedgers, the most short equity futures going back to 2011, Operation Twist, as well as 09. So sentiment was washed out.
Oh, so you're playing the contrarian card.
Well, nobody wanted these equities, and everyone was just dumping them. And we very much believe that everything should be dictated by your next best alternative. Defense costs a lot, and it was costing a lot last year. The same way that buying hurricane insurance after the hurricane hit doesn't make a lot of sense. So we didn't really believe that the valuations in the defensive areas warranted positioning. So it was an easy decision for us to move into areas that looked very attractive, Scott.
Isn't it too early to declare victory just yet? I mean, earnings are still not great.
I think we've got some oak trees growing here. So if you think about home builders, those bottomed 6 months ago now. I mean, Pulte is beating the S&P by 20%.
A lot of people I know are pointing out what's happening in the home builders.
So these are signs, you can't always see it below the surface, but once you see these things start popping up, they become more apparent. So when we
wait a minute, I think this is the right video. Maybe I'm just switching my days. Maybe he didn't speak on Friday. Maybe it was Thursday when I listened to this gentleman. I was thinking it was kind of weird they would have had him 2 straight days, but I don't know. Let me get into this.
Look at cyclicals. We think that there is a real turn that is occurring. And it's not just home builders, it's industrials, it's healthcare, technology, it's industrials, semi-stocks. All these areas, Scott, were completely washed out. Nobody wanted them. The same thing with emerging markets.
Well, we'll get there in a second.
Okay.
Do you think that Powell was friendly to you this week, or was he misunderstood by the market?
This is the video. Okay, this is the one I watch live on on TV. Okay.
I think that Powell is doing a good job given where he is. And I think that, again, it's less important at this stage because inflation is rolling over. They've already raised rates significantly. Maybe we get to 5. But the reality is, if you look at what happened in 94, Scott, that was the beginning of a rate hiking cycle. We got the Fed funds rate up to 6.5, and the market ripped from 95 to the end of 99.
So you're telling me it doesn't matter if they raise again?
Hold on.
They've already
I know like a lot of people that watch my channel are under the age of 45. Okay. Actually, I say the majority of people that watch my channel are under the age of 45. So this is a good point he brings up here, a little historical point.
Where he is. And I think that, again, it's less important at this stage because inflation is rolling over. They've already raised rates significantly. Maybe we get to 5. But the reality is, if you look at what happened in 94, Scott, that was the beginning of a rate hiking cycle. We got the Fed funds rate up to 6.5, and the market ripped from 95 to the end of 99.
So you're telling me it doesn't matter if they raise again in March and then they go again after that, it doesn't matter?
I think the market's telling you it doesn't matter.
Well, the market doesn't think they're going to do it. But I had Richard Fisher, former Dallas Fed president, today on Halftime Report says the market's wrong. And the market continues to tell, or the Fed continues to tell the market that it's wrong.
Well, again, I would pivot back to the 1980s, and you saw a very similar scenario. Inflation was high. The Fed jacked up the short-term rates. The yield curve was deeply inverted. And then in the subsequent 2 years after 1980, the market was up 50%. Over the next 10 years, it was up 400. So it's not that I...
Over the next 10 years, it was up 400%.
Think that they're wrong. It's just that I think the market already sees through this. I mean, the 10 years at 3.5, everyone was panicked that they were going to be able to refinance debt, REITs, all these other companies. 3.5 is easy to refinance.
Yeah, but the market's saying that there's going to be a cut. You really think there's going to be a cut this year?
I actually don't know if the market's saying there'll be a cut.
Does it matter? Well, does it matter to your thesis if there is?
No.
Does there have to be?
No. It does not matter. And the reason is because the valuations are at such rock bottom levels. You have Stanley Black & Decker, Scott, with yields over where they were in March of 2009. You had significant dislocations that occurred. I mean, think about, I'll use a real estate analogy. Imagine if everyone on your block said, hey, rates are going to go up. That's going to take the cost of capital up. So let's all sell our house at the exact same time. That would create a massive dislocation. But we don't have a Dow Jones Industrial Average of home prices. Okay? When you inject liquidity into the system, that creates panic. And I think that people conflate liquidity and risk. And the reality is the fundamentals of many of these companies had not deteriorated to the degree that people were selling them.
So where are we going from here then?
Higher.
How much higher?
Well, you can't annualize this month and extrapolate that. That's impossible. But the markets are cruel. They could pause, they could shed a little bit, and then consolidate and move higher. So we have a long way to go with a lot of cyclicals. They were blasted, Scott. You had these things down 50, 60%. Some of them were garbage. Some of them didn't earn money. The reality is you shouldn't chase defensives, and you shouldn't chase the hot dots that didn't earn any money. But
you think the run... Oh, man, I wish they would have let him play out the whole dang thing, okay? So I'll take you through a few other points they made there. I think were important that unfortunately they didn't show, okay? Next up, they started talking about essentially it's uncomfortable to invest right now, right? Because you're looking, earnings aren't great right now. CEOs of all these companies are super uncertain. Like none of them sound super confident, right? They're all uncertain about what's the future and all these sorts of things, right? And so they start kind of talking about that. And the John gentleman, he starts bringing up points that, anytime you're in one of those markets, that's a time to buy. You need to take advantage of those sorts of markets because they don't, obviously come across that often, right? And in any of these situations, it's never a comfortable feeling to buy, right? Whenever you're buying into a stock that's a falling knife, as they say, or the market's a falling knife, it's never a comfortable situation to be buying in that, right? And you got to understand, you just have to tough it out, and you have to be a buyer in those very, very tough moments in the market, right? That's what you have to do. It's an uncomfortable feeling, but it's something you have to do. And he also brought up the postcard analogy. If you need a postcard to tell you when to buy, like you totally missed it, right? And if it goes back to this point that a lot of people hope or they think they're going to be able to buy stocks super cheap while earnings are great, the economy is great, confidence is great, and it's like it doesn't work that way. By the time earnings are great, CEOs are confident again, the economy is great. By the time all that happens, you're looking at record highs for indexes, record highs for stocks. There's no such thing as you get to buy at some sort of huge discount in those sorts of time periods. The only times you ever get to buy for massive discounts with stocks, I'm talking stocks down 40%, 50%, 60%, 70%, like we got over the past, let's call it 6 to 9 months. The only time periods are those uncomfortable time periods that you go through and you're looking and you're like, oh gosh, man, there's so much bad news. There could be more bad news coming. That's the only time periods you ever get to buy for those sorts of discounts. And so when you get that opportunity, you have to take advantage. And that's what I obviously took advantage of last year, and I'm sure a lot of you guys did, right? Where you were buying stocks and you might have felt like an idiot in the short term, right? Because you buy a stock and it's down 55%, and then it goes down another 10%. And you're like, seriously, like, why didn't I wait, right? But at the end of the day, fast forward a few years and you're looking very well. You're looking very well for yourself, and you're like, oh my gosh, that was the best decision I ever made. The thing that gets people, and a big warning I want to give everybody out there that's watching this video right now, is the thing that gets a lot of folks is when you start to have these rallies, people are very quick to take profits. That's happened to me 100 times in the past, where I'll take profits way too soon. A great example of a stock just in this past year, Netflix. I bought Netflix at $181. This was back in the summertime when it was just getting obliterated, okay? I bought the stock at $181, which wasn't even the lows. I think the lows for Netflix was like $165 on the 52-week or something like that, okay? But I got it for a pretty good price. But I took profits way too soon. I took profits a few months later at $200 and I think $40 or somewhere in there roughly, right? And did I make a great return? I made like $60 per share roughly, right? That's a phenomenal return. Netflix today has climbed another $125 since then, okay? So I missed out on great gains. And so let that be a lesson to you. Don't be so quick to take the profits. If you're in great companies, those babies go on runs for years, okay? Let them do their thing. They might have pullbacks here and there. Market might go down. That's fine, okay? If you want, you can take advantage of buying some more shares. Don't get too confused out there. Appreciate everybody joining me as always. Make sure you take advantage of the Patreon. That will be pinned. Comment down there, see what stocks I'm buying and selling. And yeah, appreciate you guys. Much love as always. Thanks for being subscribed and have a great day.